Investors, with the vast majority of banking fears behind us, the stock market has been on the up and up, but there are still some concerns for the year ahead. However, more on that in a moment to come. If you're new here, I'm Ari, your value and dividend investor on YouTube, here to share market insights, stock ideas, and from time to time, words of wisdom from other masters of the market. As for today's video, we're going to stick with just a quick personal account update, followed by a brief market update, and dive right into 5 dividend stocks for you to have your eyes on this week. Before we dive in, all I ask is for your help in tapping on that thumbs up button if today's video brings you any value. And if you want more videos like this one, join me on the journey by simply subscribing. Now with all of that out of the way, let's dive right in. So as mentioned, banking fears are slowly fading into our past, and kudos to any and all of you who took full advantage of the fear, but there has been a nice buildup now of confidence in the market, which allowed my account to jump up to $111,816.98, but in my honest opinion, this market momentum will be short-lived, and I consider it all to be built off of false confidence. Why? We must continue to keep our eyes solely on market mandates, the factors that are truly driving us down this volatile path. So what are they? Well, the first is the labor market that just remains insanely robust, which we can see just after our latest employment report this past Friday. And the strength of the labor market ultimately means that the Federal Reserve can proceed with another interest rate hike. The next go around means another 25 basis point hike. But why?
Inflation.
It is still sky high and remaining stubbornly so. Therefore, we as investors should be taking a step or two back, zooming out and just getting smart by being proactive with our investments instead of reactive, which leads me to the 5 dividend stocks that I'm sharing are ripe for an investment or at best and add to your stock watch list. With that, let's dive right into the first dividend stock of our list today, Taiwan Semiconductor, ticker symbol TSM. Now, the last I mentioned Taiwan Semi, I got a lot of heat, and shortly after, the stock took off like a rocket. And I'm not here sharing that for any other reason other than it's important for us as investors to recognize reliable money makers when we see one. As for Taiwan Semiconductor, it's one of the most dominant semiconductor manufacturers, which established itself well from its competitors in the global marketplace and accounts for nearly 20% worth of the semiconductors on the market today. However, Taiwan Semi gets the mention today because it has recently been sliding as of the last handful of trading days, down by nearly 4%, already at $90.20 per share, with a PE ratio coming in below its competitors at 14.1. But when it comes to smart money, hedge funds have found Taiwan Semiconductor to be the go-to investment, as plenty of them are loading up on shares of Taiwan Semi. And as for analysts, they too forecast further upside, coming up to $100.33 per share, which works out to 11.23% worth of upside. Will likely come about with an economic turnaround when demand springs back and companies seek to ramp up supply. But this is all about the buy and hold for a dividend, which is above the sector average, coming in at 1.69% worth of a dividend yield. Moving to our second dividend stock, let's talk about Archer Daniels Midland, ticker symbol ADM, which is powerful in its own right as a food processing and commodities trading corporation focused on anything from flours and starches to grains, beans, alternative proteins, and sweeteners, right down to pet foods as well. Perhaps it's not as exciting, but a necessity for society and how we enjoy our foods today, making it both profitable and reliable during economic downturns. As of this video, Archer Daniels is down by nearly 11%, trading for $79.41 per share, calling for investor attention to it now, as it's a $43.52 billion market capitalized industry leader with a PE ratio at 10.3. And for some added confidence, analysts are calling for over 32% worth of upside, with a share price rising to over $105 per share. However, we are here, of course, for dividends, which is where Archer Daniels comes in with a 2.08% dividend yield. As for our next dividend stock, I want to bring Caterpillar, ticker symbol CAT, back into the picture for all of us, especially if you're an investor worried about the next 6 to 8 months, where we could experience a lot of economic uncertainty. Now, as I'm sure you know, Caterpillar is the world's largest manufacturer of construction engines and vehicles, and while construction plans or projects right now may have been altered to accommodate our trying times, what remains clear is that business will be booming once again upon an economic turnaround. Therefore, it's always worth it, in my opinion, to take full advantage of Caterpillar's stock dips as the market ebbs and flows, like now, whereas we can see it's down by 10% year to date, trading for $213 per share with a PE ratio at 17.2. Not too shabby for such a fail-safe type of investment, but if that wasn't enough, let's build up some more confidence investing alongside hedge funds with smart money pouring millions into this investment opportunity. And on top of smart money moves, we see bullish analysts as well, with a forecasted Caterpillar share price rising to $256.17 per share. That's nearly 20% worth of upside potential to capitalize on. Now, in the meantime, shareholders will also be enjoying Caterpillar's dividend, which is way above the sector average at 2.21% worth of a dividend yield. Next up, Atmos Energy, ticker symbol ATO, which is one of the United States' largest natural gas distributors, serving over 3 million customers in over 1,400 communities across 9 states. So before we even go any further, this dividend stock has reliability written all over it. Yet it's not immune to market volatility, so as the share price slides, as it recently has been doing, currently down by 4% from this time last year, trading for $114.84 per share, it may be worth your attention, as its PE ratio is even down at 19.5. Now, in even more positive news, we see insiders at Atmos at a director level buying more shares worth of Atmos, which is almost a great indication of the direction of the company. But that isn't all, with some prominent hedge funds investing into Atmos, from Fisher Asset Management to Bridgewater Associates and Graham Capital Management. And when it comes to analysts, we have more upside forecasted as well, with the share price rising to $132.50 per share, which is more than 15% worth of upside. But let's talk about the Atmos dividend, as it's coming in above the sector average at 2.47% worth of a dividend yield. And last but not least, I want to jump into the financial sector, as the largest banks are still presenting a bit of a discount for value and dividend investors, and we can do so by breaking down JP Morgan, ticker symbol JPM, which is the largest bank within the United States by assets and a global financial player within the industry. Truly just a too big to fail bank with a fortress of a balance sheet, according to Diamond himself. As of this video, JP Morgan is still down year to date by almost 5%, trading for $127 per share, with a battered PE ratio coming in at just 10.6, which is why we've seen plenty of hedge funds loading up on this bank, especially amidst all the recent mayhem within the financial sector, along with analysts who are also foreseeing plenty of very promising future upside for America's leading bank, with over 20% worth of upside coming to a share price of $153.91 per share. However, in regard to the JP Morgan dividend, it is coming in at 3.13%, which is way above the sector average. Now there you have it, investors. From Taiwan Semiconductor to Archer Daniels, Caterpillar, Atmos Energy, and JP Morgan, the 5 dividend stocks that you should absolutely be adding to your watch list this week, and upon your own due diligence, investing into them should they make sense for your portfolios. And if you do end up pulling the trigger or already have them in your portfolios, let me know by dropping a comment down below, while also tapping on that thumbs up button if today's video brought any value to you. Now, if you're really looking to power up your investment returns during 2023, I encourage you to join me on this journey by simply subscribing for the weekly stock ideas. With that, I will see you all in the next video.